I see we had Mr. Don Vogt in the building, and I wanted to ask him to come up and speak because Don is in one of those unique situations where
How's it going?
He trades live, has the MyFX books, so the receipts, and is profitable, and yet people still sit there and hate on him, right? And this is one of those prime examples of there's nothing you can do to make people happy on social media. And I saw you recently post about being profitable, but you're having a negative risk to reward. So I'd love for you to speak on your system, no, not essentially your system, but how you navigate that. You being profitable and consistent, and yet you got all these other people trying to tell you you're doing something wrong when you already know it's doing. The results say differently. But it's great to have you here as well.
Hey, how's it going, Riz? I think this is like my one of my first ever spaces, like ever being on any spaces overall.
And this is the best.
Well, dude, give me a follow, Don. Just for my own little ego here, bro. Just do me a favor and give me a follow, and I can't wait to hear what you got to say.
I got you. No, I was just it's just like I feel like a lot of traders, like especially like when they're new, especially they feel like there's like only like one really way of like trading, right? And like they're not like very open to different types of strategies. I guess it's because like two they came across on like social media coming up overall, and I guess because a lot of people on social media I would say like trade it's like a cult. There's like different cults in the industry. There's the this type of trader, that type of trader, this type of, like there's different types of traders, right? And it comes down to like really like who got you started, and a lot of people just like I guess like they get married to that strategy, and they don't ever want to change their perspective on trading, right? So like I get it. Like when I first started trading, I was trading like way differently from where I do now. Like I was like I was like, okay, my trades need to be 1 to whatever RR, 1 to 10 RR. I need to risk this much to make this much, right? And then now it's kind of like I got to a point where over the years, through all like the mentors and like everyone that I've kind of learned from, I just took a bit of each person's strategy and made it into my own. And I realized that like risk to reward for me, at least, like it doesn't really like matter anymore. Like it doesn't, because like I think of risk to reward like if you were to like walk down a street, right, and you were to find like $100 on the floor, would you like pick it up, or would you be like, no, I want $1,000 instead. I don't want to pick up the $100, right? It's like when the markets are starting to like change and like in terms of structure or in terms of just like direction, at some given point, you gotta just say, okay, well, this trade isn't the same trade I got into before, because like you might have gone to a trade due to so and so reason, but during like that session, the structure might have changed. You would have had some breaker highs, breaker lows, whatever it is that you're looking for, and then at some given point, you gotta just accept the fact that okay, this trade is invalid. So why can't I just close out here and then wait for another opportunity to get in the markets again? Right. So like that's just how I see risk to reward. It's kind of just like instead of me like just subconsciously thinking like, okay, today I need to make a 1 to 5 because I need to pass my funded, whatever. It's more so of like, okay, well, what's the best way I can adapt to the markets? Right. So that's kind of how I see risk to reward now. So yeah, it is different. Like a lot of traders are against it, but for me, it's like I'm not even like trying to like I'm not even trying to prove people that risk toward is irrelevant or irrelevant at all, right? It's just like some of my trades might be a 1 to 1, some of them might be a 1 to 4, some of them might be a negative risk to reward, right? But it's just about adapting instead of just like, kind of forcing a certain RR just to prove a point, right? So that's just how I see it.
So quick question, Don. Yeah. When you say that you have this negative risk to reward, does that mean that your stop loss is so far more than where the actual trade is going? Or are you stopping yourself out sooner for a better entry? Like, explain to me or explain to the group what this negative R trade, how that works. Because I could see it in my own head a couple different ways, and I'm just curious.
Yeah, so like it'll be like I'll put my like, so when I get into a trade, I'll have like a hard stop and a hard TP, right? Let's say I'm trading gold, my entry is like 1800 and my TP is like 1805. My stop loss could be 18 or 1795. So that's like a 1 to 1. That's why I initially got into a trade, right? And then during a trade, if I see that price starts to reject certain levels, creates strong resistance, because I trade price action, right? So as it forms those things, I'll be like, okay, well, this trade now is invalid. So then I just close up trade and profit, or close out the trade at break even. Whereas a lot of people who are like, still like they want that high RR trade, high risk to reward trade, they might end up just holding from TP or stop loss. Does that make sense?
It does. I just want to reiterate, it doesn't mean that you're rolling your stop loss up higher and then it's still a fixed stop loss, right?
Yeah.
Because I can
think
in a negative R situation that I've got. What's that?
It sounds like he's just cutting his trade early when it starts going against.
Yeah.
Okay, so he's refining his entry method, and he's willing to take a break even. But again, my point is just your relationship with your stop loss within a negative R average. I'm just still trying to make sense in my own head how that works. So hopefully my questions, I'm formulating them correctly to where you get what I'm curious about.
Yeah, so like there could be some trades where I get stopped out, and like you might see like my past, like for instance, 10 trades, I might be X amount in profit, let's say like $10 in profit, right? And then I have one trade with a stop loss, like might get hit, and it might wipe up like half of those profits. So it might wipe up like maybe like $5 of that $10 that I made in some situations. But I think like the risk, the way I trade,
so you have
relies
a
heavily on
stop
this like
loss
win rate. Yes, I do. In some cases.
Okay. That's
just like
that's how I was extrapolating what you were saying. And that doesn't mean it's a bad thing, especially if your win rate is higher, right? Like you're winning more than you lose. And when you do take a loss, it might be a harder hit, but you're still in the profit. Is that fair to say?
Yeah. Literally what it is. Yeah.
Right on, brother. That's cool. How do you, since this is your first time on a space, would you mind telling us a little bit about where you're from? Because I'm learning about you as my boy, and he would hear your story better than me. So my question is, how do you engage with price? You said you read price action, but do you have obviously you have a clearly defined model, but could you tell us a little bit about more like where you're from, how old you are, and how you engage with price?
Oh yeah.
That is pretty much the number one question I ask. And that goes back to when the room and he was asking. So I like kind of prefacing your voice and who you are with kind of those kind of prereqs within the convo.
Yeah, so
you're from the United States, right? Obviously.
No, I'm from Toronto. I'm from Canada.
Oh, right on. Hey.
Yeah. Yeah, no, I'm from Canada. I'm 23, and I started trading when I was like 19, like 18, 19. So it's been like around 4 years now, I'd say, since I first started.
Okay, yeah. And how do you engage with price specifically? Like, some people are just, Jade Cap says he likes the entry on the high time frame Judas. And that's essentially the 2022 mentorship model, it sounds like, because he's getting in at the low and he's riding it to some legs within distribution.
If you don't mind me like interrupting, I know a little bit about Don. He's not an ICT trader, I don't think. So
no, that's fine. We embrace traders all together, so he doesn't have to be. Especially everyone's on their own journey. So
yeah. So
anyway, go ahead.
I'm like a price action trader, right? So when I trade price action, I have like a theory where it's like I have we trade like candle theories, right? So how I see it is like no matter like what time frame you go on, like either the weekly, monthly, daily, or even the 1 minute, you're always gonna have the same candle high, low, closure and opening, right? So when we trade, we're using like almost every time frame to our favor for our analysis. So we use like the weekly down all the way to the 5. And then usually when it comes to just entries, we would enter on like the small time, like the 5, 15, or the 30. And it comes with just candle theory. So reading candles, understanding like how candles are printed, how candles are printed like backwards. So in some cases, like we might be able to see a wick fill on like the 1 hour, but when you go in a smaller time frame, there might be like a for instance, a fake out, for instance, we break out the range, then you kind of come back into the range, right? So like we kind of see the markets in like one type of motion, sort of. And then on top of all that, on top of the counter theory stuff, we're just looking at like support and resistance. So that's literally all that is.
Yeah,
Out
so
of
I
curiosity-
want to ask you a question too,
Yeah.
Don, because I brought this up to a couple friends, and maybe this is something that some people are not aware of, and I think I learned this from Tom Dante, I think. But it's not like anything groundbreaking. But do you ever like blend candles together?
Blend candles, like what does that mean?
Yeah, so like let's say if you're looking at a 30-minute time frame, sometimes it's adding two 15-minute candles together, but if you're actually looking at a 15-minute time frame, you can add two of the candles together separately. Like you can take the open from one candle and a close from another candle, and like you're essentially doing math on them, right? So you can actually get a pin bar or an outside bar, something like that, from two separate candles that you might not actually see on a specific time frame.
Yeah, that's. I'll say that'd be a better way to describe it. I've never heard of that though. Blend candles.
Yeah.
Yeah, it's kind of what it is. It's kind of like you're looking at one time frame, like one candle on the 1 hour, and then you're kind of seeing how that's forming on a smaller time frame, like the 15 or the 30, whatever it is, right?
Yeah, and like I guess just you kind of can see what the order flow is between 2 hours, right? So like if you have one hourly candle that's bearish and then the next hourly candle is bullish, like depending on where that first hourly candle opened and where the second one closed, you might actually get a pin bar off of that.
Yeah.
Wow.
I trade a little different from you guys. So like when it comes to like order flow, like I'm not too familiar with it. Like I'm not like too familiar with like that style of trading.
Do you? Pardon?
I think your mic cut off.
No, I'm sorry. Maybe it did. My internet's undefeated, and so I was asking about like a balanced price range. Do you utilize balance, or are you incorporating any form of algorithmic principle or theory within how you see and or read price? Pure honest question. It can be yes or no. It doesn't bother me. We embrace you no matter what.
Yeah, no, I'm not very familiar with that stuff. No.
Okay,
Yeah.
no, that's fine. I think
I feel like
sees the market slightly different.
A lot of I think like for majority like the space is like everyone trades like very similar, right? Like everyone has like kind of like a similar strategy, sort of.
I mean, a lot of people that come to this space are trading ICT, but it's not solely ICT, and we don't somehow shun or disqualify you or your voice if you don't trade them. We embrace not only our global community, but the collective consciousness that is kind of being a trader in this journey, and the difficulties and the pitfalls and then the rewards that come with it.
No, shout out to ICT.
We embrace it all, bro.
I hear ICT like almost everywhere. Like I go on my streams, everyone's like, "Oh, Don, you trade ICT, right?" Like I'm very open to like all strategies, and just because like I don't trade all strategies doesn't mean like I appreciate all strategies out there. I believe like they all work. Like everyone has their own way of seeing the markets, right?
It's a lot like a language, a philosophy, or even I would say a political belief system. People, instead of debating and being divisive, just understand that we all come from different roots. We all have different ways in which we were brought up or we learned something. And if you've been able to find profitability and success, then it really doesn't fucking matter.
Yeah.
It doesn't.
Hey,
So
kid, can I ask Don one question?
Jump in, bro.
Yeah. What's going on, Don? So talking about becoming a professional day trader, and we know that capital is a huge part of it. Like, do you trade prop firms, or what capital are you managing right now?
No, I don't. I think because like I don't trade prop firms, but I think it's because like when I came up as a trader, prop firms like weren't that popular yet for me. So I sort of just have my own funding.
So with your own funding, like how much do you have? How much capital do you have, and what percentage do you aim for on a monthly basis on average?
So like we started we started live streaming the account with 147,000. I think it was last August, and currently it's sitting at 913K. So when it comes to like just goals and like monthly targets, like I don't have any goals and targets. Like I don't have those targets just because I feel like whenever you have like a target in mind, that you want to reach, you're kind of adding pressure behind your trades now, right? So like every trade you take, you're always going to be subconsciously thinking like, okay, well, I need to make 10% this month because I need to do this. I need to pay off this and that, right? And every trade you take is kind of like, there's like that, you're going to be kind of like emotional about it, right? So whereas me, like I'm kind of just like, I'm very open to each month. Like every month, I don't expect to come to charts every day to make money. I sort of just come to charts every day, following my same plan, my same like playbook. And then whatever happens, happens. Like I might finish off like some months 40%, might finish some months off 2%, some months 5, some months 10, right? So each month just differs and it depends on like what the market kind of gives me, sort of.
Wow, that's pretty crazy.
Yeah.
So how do you go about it with your risk management? Like how much do you risk per trade? Do you have like the same risk, or does it depend? Like if you see an A+ setup, you'll risk more?
I'll say like when it comes to risk, it just like, it sort of just like depends on how I'm kind of doing that month. Like I might start off a month going a bit more aggressive. So I might start a month going off like maybe 5% risk per trade or 4% risk per trade. And then as the month goes on and then like, you know, things are starting to, you know, the market's starting to slow down or whatever the case may be, I might lower the risk down to like 1 or 2% per trade. But for the most part, like the average should be around like 1 to 5%, I would say. Yeah. It can't just differs. Like it's just like it's what the market gives me really, and what the market prints, right? Like because all months are different, right? Some months might be more volatile, and some months might be a little more dry. Like I trade gold, so I mean gold for the most part so far this year has been pretty straightforward. It's been pretty like I would say volatile, but there will be months for sure where things slow down.
So would you say you're more of like a discretionary trader or like mechanical? And also, do you trade like Raja and like Uncle Ted? Because like I think Uncle Ted hit me up, was like, "Oh, Donvo trades like me" or something like that. I don't know.
I'll say my trading for sure has been influenced by Roger for sure, because I used to be on his live stream back then in like 2019, 2020. Yeah, it's sort of just like that price action, just reading candles and stuff like that. Yeah, I did start with like when I first started trading, I did start with trading I don't know if you guys know, but and I don't know, you know, I don't know how it's gonna end off, but you guys know who Steve Morrow is? Like that was like my first course ever into just trading.
Steve Morrow's cold. Steve Morrow's cold. He's pretty cool.
So like I kind of went from that to Q Banks to Raja, and then you know now I sort of just combine like every mentor that I've learned from, and I just trade the way I trade now, I guess.
Yeah, you gotta create your own sauce.
Yeah.
You know, it's like trading like an art.
Yeah.
So
yeah, so like I got a question. You're not. I mean, I've gotten to a point where like people keep asking me, "Oh, have you studied like IC2's new content, et cetera, et cetera?" And like every time I hear that, I'm just like, no, like I already have an edge, and I already know what makes money in the market. Like I don't need to keep adding things to my strategy. Like I'm literally just trying to fine tune whatever it is I'm doing. I don't need to constantly look for something new. Like have you gone? I'm sure you're probably gotten to that point, right? Maybe you can talk on that a little bit.
No, it's kind of different for me. Like I feel like there's never like I don't see any like there's no limit. Like every year so far, I think for the most part, I've always evolved. Like, and I think a lot of traders think that once you get profitable, like that's it, that's the be all end all. But I see it kind of differently, right? Like every year, like we may have the same like foundation, but we may adapt and adjust to new concepts. Like we went from 2020, looking for, or 2020, we were getting like quote unquote called fake out, right? And then 2021, we started looking for fake outs so we can be in that trade. And in 2022, we sort of like got to a point where we can now anticipate the fake out, right? So like every year, it's just kind of like you're just evolving over time, and that comes with just experience on the charts. You know, seeing the same thing every day form and happen, and it's just part of adapting. So that's how I see it. Like, we were doing fine last year, right? But if you were to look back at last compared to this year, you're like, wow, like there's a huge difference in our trading for sure.
Yeah, I think that's a big point to like touch on. Is like I always find the best traders can adapt to like any market condition.
Yeah,
you have to be able to. Otherwise, that one market condition, let's say, at least on my feed, like on Facebook, when the COVID rally was happening, literally everybody was on my timeline just buying the market, you know? And then when market conditions change, now all of a sudden my timeline is absolutely quiet, right? Because everybody's just making money in one market condition, and then they don't know how to adapt, and that doesn't make you a good trader. That just makes you part of the herd, right?
Yeah. Like you can decide not to adapt, right? You can obviously just like, trade the way you are and, be fine. But I kind of just want to see like how far I can kind of push myself in trading and see like what I can learn, because who knows, like maybe next year I might be trading differently, right? I might be trading, different style.
I see. Yeah, bro. Hey, I'll just say this. I'm literally twice your age, man.
Oh, really?
And I can tell you personally, I can't stop trying to refine my edge. And it's this lust for knowledge and model and framework. And I think when you stop learning, you stop growing, you become stagnant, and then the market's going to get you, right? That's just my 2 cents.